Welcome back to the Daily Journal. So we are reviewing the New York reversal from Nasdaq's price action on Friday. This is probably my best trade of the month so far, and one of my favorite models to trade. I did execute on the 30-second as well as the 50 minutes, so we'll get into the executions later on in the video. Let's start at step one, which is how to find bias. So we'll rewind the clock for the step. So going into the session, let's just move this forward a bit. So this is the 10 a.m. over here. So going into the session, when you see a one-sided move, one directional, there's just been expansion, retracements, expansion. Now, when you see that kind of move going into your session, that's London one directional. Yes, Asia just did a retracement, but it was a retracement of this move. So when we say one-sided, in terms of a market maker model, the market is selling off, and so the market makers are absorbing sell-side liquidity, right? They have to be buying. If everyone's selling, the market's selling off. Who's on the other side of that trade? It's the market makers absorbing the sell-side liquidity, buying up the sells. So that's what we mean by one-sided delivery. So when we see that kind of move going directly into a high time frame pool of liquidity, which is a previous week low in this instance, we can start framing potential reversals, because the likelihood of New York to continue lower, it's possible. What you may find is one of two things. If not a reversal, you'd have a retracement, then continuation, or you'll just blast through this level. The fact that you've had such a huge expansion, you can start looking for and framing reversals. So let's drop down to the 15 minutes. So there's that previous weekly low. We're going to just speed things up to the session, right? So there's the previous week low. So that's price. This is where we want to start looking for trade setups, specifically speaking, the reversal. So when I see the previous weekly low, which is a much higher time frame pool of liquidity, versus something like this, which is the Asia relative equal highs. So even if this is just going to be a retracement before continuation, you would expect at the very least some of this buy side liquidity, because that's what the market needs to continue lower. And when I say the market, I mean the market makers, right? They look at what the market makers have been doing here. If the market's been selling off, they've been absorbing the sell side liquidity and leaving behind buy side liquidity above these swing failures, as well as all these inefficiencies. So liquidity and inefficiencies are the two reasons why price moves. So they've created the very conditions for price to return with this accumulation side of the market maker model. Now, we've spoken about one-sided delivery it's the same thing applies over here, right? But for the session that we're trading, we don't need to worry about anything other than intraday movements, which include London and Asia. So both in London and Asia, we have relative equal highs. So we've got plenty of buy side liquidity in the form of relative equal highs, as well as these swing failures, etc., and these inefficiencies. So those are a really good draw of liquidity when you see price confirming a reversal from a previous week low. So let's just move things forward a bit. Okay, so at this point, let's just rewind the clock here. So at this point, I like what I'm seeing, and the reason being is that we've got liquidity built up on both sides. So this is just a range, which is what you want to see going into the session. You've already taken on the previous week low. Now we've got pre-market sell-side liquidity. So what I'm looking for, since I'm framing a reversal, I'm looking for price to sweep these lows and then reverse. Because I've got this 50-minute market maker model. The accumulation side has been validated with the liquidity and the inefficiency. Now I need to confirm a smart money reversal to confirm the shift from accumulation to distribution. It's the distribution that we want to be trading alongside with on the market makers, then with trend essentially, or when I say on trend, with the market makers. And so we can see with also this 6 a.m. candle, we are anticipating that this is going to be a reversal candle. If these lows are swept and we get a shift, or rather a change in state of delivery at this point, you could even use this if you like. That will then confirm the reversal. And once this candle closes at 10 a.m., that will then confirm this reversal, right? The change in the state of delivery confirms a reversal, but until such time that that candle, the 4-hour candle closes, it's not certain yet, right? We have to wait until the 4-hour candle closes, because you can get a change in the state of delivery here, but what if it then trades up and then immediately sells off? Then it becomes invalid. So yes, you confirm you get a smart money reversal. It's then confirmed and validated through when time aligns with price. So, or vice versa, right? So let's just drop down to the lower time frames to watch this play out. And again, you see what I'm looking at here are these equal highs. So at the open, what I wanted to see was these highs remain intact. And the reason being is, when I saw that, I was like, fantastic. So even if this doesn't turn out to be that 50-minute market maker to play out, I expect at the very least these highs to get swept before going lower, right? I want to see pre-market and the 930 buy-side liquidity taken out if I were to frame shorts. So the fact that we're going lower first to take out the pre-market lows, having taken out this previous week low, I can then safely frame long positions with these targets and higher, depending on what the price action is giving me. So I'm going to drop down to the 30-second chart for this. And the reason being, actually, let me start on the 1 minute here, because once price drops down to this level, when it eventually gets there, I'm on the 1 second here. Okay, so at this point, okay, so what I want to point out here is when I see price down here having expanded and now it's starting to kind of, stall and go sideways, starting to consolidate, my first point where I can confirm a change in state of delivery is this, which is too high for me. So that's the reason why the moment I saw price down here without that clean change in state of delivery is when I immediately dropped to the 30-second charts. So I then looked for SMT. I think there was SMT. I'm actually not sure if there was. We'll check when we dropped up to the higher time frames. But nonetheless, there was the change of the state of delivery on the 32nd. So I'd entered on this confirmation. And when I see price expanding, then met with more expansion, that's a reversal. And what I actually want to bring up here is my 15-minute chart. Because remember, I'm looking to trade the 15-minute market maker model. So I want to see a reversal sitting up here on the 50 minutes. So I'm also very paying close attention to the open of this level, which it should be can see that level right over there. So it was at that point I was in this trade and these candles, and this confirmation, let's have a look. Yeah, you can see. So as this was starting to close, jumped in. As I saw this was about to close, jumped in. And I did anticipate this simply because I've seen this move so many times, and the likelihood of this reversing from over here was very low. If it was going to reverse, I expect it to reverse from here. But since this is the 30-second chart, I was looking for some more price action if this is going to drop lower, come up, and then there'll be some pretty wild manipulation. But again, I'm framing a high time frame reversal model. I expect at the very least the 1 minute or even 30-second is going to pump up, take us some buy side, and then eventually stall. It's not going to just whipsaw, down, up, down immediately. That'll be some crazy manipulation. And if there was a news event, then sure, I could expect that. But for me, this is a high probability setup, even though it's a 30-second reversal with a 4-hour downtrend, 50 minutes, etc. That is the conditions for a reversal model. It's one-sided. So when I see the session start by taking out more sell-side liquidity after a previous week low, pre-market lows, there is no more sell-side liquidity to take. It's now time to switch to the buy side. And of course, I'm anticipating the shift to distribution because of the market maker model on the 50 minutes. So the targets I used was the first target. I eventually had to close the trade early on the funded account because of the consistency rules. So I exited at the first standard deviation. I was looking at these as a really clean drawn liquidity, and I got out on the funded accounts over here. On the evaluation accounts, I then executed on the 50 minutes. When I was seeing this set up like this, and just a little top tip, when you're trading in New York and you see a 50-minute candle sweep liquidity and then with a huge wick and then close bullish, and you've got clean targets above, just send it. Manage risk, of course. You can see there's that execution. You can see that's where my entry was, right? And you can safely put your stop loss at this level. You can use the 0.5, you can even use this. It's, if price is going to return to this level, you don't want to see it go this low, because if it is, that's probably a reversal and it's just going to drop lower. But I promise you, once you've seen this setup as many times as I have, when you see it. So with this close above that, if it is going to drop lower, maybe an immediate rebalance, but with price being so oversold, I expect it just to rip. Because what this may be is potentially a 4-hour smart money reversal. So you can see it, and I'll drop back to the 50 minutes in a moment, but see how prices closed above this? There's a change in state of delivery on the 4-hour charts. Previous week low, 4-hour change in state of delivery, plenty realistic highs above here. This could very well be a shift from accumulation to distribution to these highs. Of course, we got this 4-hour fair value gap as well as the new week opening gap, which has acted as resistance. So we'll see how that plays out, right? And here's the thing, is that this is the reversal. And if you've watched, any amount of my daily journal videos so far, I often say, you don't have to catch this reversal. You can look to just trade the continuation. And that's how I frame most of my trades, right? So I'm looking for what the 4-hour chart is doing. Is it reversing? Is it continuing? And this is why I got my two models, the high time frame reversal model or the high time frame continuation model. Even if you get the buy slightly wrong, you can still frame trades within that 4-hour candle with the 50-minute charts with executions on the 1. So going down to the 15 minutes, that being said, if you hadn't have caught this reversal, and I don't recommend anybody does if you're a beginner, don't try to catch these moves. I know it seems, like a real, it's a great risk reward and this and that. This wasn't actually the craziest. Okay, the 30-second chart was great. If I were to hold it all the way, that trade would have been nuts. I mean, the fact that I had to close, this point over here. I mean, just under half the move. Oh, and I just want to point out as well that look at the standard deviation. That is stunning. So from the high that's triggered the low to the sweep on liquidity, basically a full extension of this market maker bar model. Standard deviation is probably the best tool that you could use. I mean, apart from the horizontal and vertical lines, this is by far the most effective tool on TradingView by far. So you can see how that's 6 a.m. candle was confirmed as a reversal, and this is what I'm currently sharing with the students in the community is the power of 3, which is what these candles are for: accumulation, manipulation, distribution. This is a type 1 AMD, so yeah, pretty powerful stuff. And what I wanted to point out is that once you've confirmed this candle with the closure, there's your change in state delivery. You can look to get on the side. There's 2 ways you can do that. I'm just going to close this for a second. Once you close above this point, right, you've already made the wick of this candle and then closed above the opening level. Then you've closed above, I think this is a rejection block, not too sure, but whatever you want to call it, it's a type of order block. Once price closes above that, look what it retests, and then bam. So you could frame a trade. There's a low, and there's those highs we were talking about just now. And there we go, straight there, bam. 2-hour trade essentially. And that's the 10 a.m. continuation. Alternatively, let's see what the 1 minute could have given. I mean, how much simpler was that on the 15 minutes as opposed to the 1 minute, right? So, but let's drop it down to, right, so there's the 10 a.m. Let me just rewind the clock here so we can just see it play out. 10 a.m. Actually, let me know, it's just, the video is getting a bit long, but so basically once the 10 a.m. opens, you need to look for price. I mean, once you hit the 50-minute closes here, that's your trigger. You can drop into the lower time frames. And you're looking for one of 2 things: price dropping into an inefficiency and or liquidity. So my eyes immediately go to these lows. And the question is, well, did the correlated pair sweep it? There's SMT. Yes, there's SMT. Right, so that's what you want to see. There's SMT. Then once you get your change in state delivery, you could then, you could pull the trigger here. And that turns out to be just higher than the 50-minute charts in terms of risk to reward. Alternatively, what you could do with that, once you've got the change in state delivery there, you could then look for, the midpoints of this little range. You could use the fair value gap, or you could trade the continuation of this. And once price closes above that, delivering out of this fair value gap, you could literally just enter here. And you see how continuations not only are higher probability, but better risk to reward, almost double what you would have got on this reversal. Right, so this is just a mini little market maker model, which plays out here, but we know the trend is to the upside. So yeah, cool guys, thanks for joining. Please like and subscribe. Comment if you have any questions. I'll see you guys in the next one. Cheers.